what's up, my friends? So finally, right, my annual in-cam trading has come to an end. So right now, right, I'm actually back to my normal work schedule. I can, produce my videos at the comfort of my own time, own target, right? So you can see my face if any of you are interested. So yeah, that concludes the end of my annual in-cam training. Been to the jungle for the last couple of weeks, right? It's a good experience, catch up with my friends, my longtime buddies. So now, back to trading. So I've received an email, right, from Saif, right? Saif dropped me an email. He said that, hey, Rayner, as a trend trader, as a trend follower, which are the best indicators to use? So for me personally, right, if you're my answer to Saif is this, right? I personally use the average true range indicator and I use moving average. I use the 20 and 50 exponential moving average. These are the only two indicators I use. But that aside, right, you don't have to use these two, right? Because I've seen other traders using a triple moving average in their trend following approach. They use the Bollinger Bands. So there's a few indicators that you can use, and there's absolutely no reason why you must follow mine. I think it's more importantly for you as a trader to find which set of indicators works best for you. So that aside, right, I hope I've answered your question, Saif. And in this week, right, back to the markets, we'll be talking about sugar, we'll talk about the New Zealand dollar, and much more. So all this and more in this week's market analysis. I'll see you there. Alrighty. So first up, we'll look at sugar. Sugar is a commodity, a soft commodity. And currently right now, I'm seeing a potential trend trading opportunity on sugar. But first, let's analyze it from the weekly perspective. When you look at sugar, you notice that it is currently in a beautiful downtrend. It's in a downtrend. You see consistent lower highs, lower highs, lower highs, lower highs here and here. And if you notice, right now it's trading, almost into multi-year lows. The low of 2012 is somewhere around here, and right now, we are in 2015, and it's currently trading clearly, right, close into the multi-year lows. So a trading opportunity that I've identified is on a daily chart. Notice on a daily chart, price tends to pull back towards the 50 EMA over here. The blue line is the 50 EMA. The red line over here is the 20 EMA. And this is the 50. So what you notice is that price tends to retrace back to the blue line, the 50 EMA. And right now we see a potential retracement back towards this blue line, which is the 50 EMA as well. So for me right now, I'm looking for short opportunity somewhere around in this region. We have this previous swing high, which could act as a potential resistance. We have the 50 EMA as well, which could act as a dynamic resistance. So this area is of an interest to me. So if you're someone who trades the trend as well, this is definitely an area for you to pay attention to. So in terms of execution, in terms of entries, there are two ways you can go about it. Number one, you can simply place a limit sell order in the resistance zone. Number two, what you can do is wait for a confirmation. You wait for price to show rejection at the area before you look to take a shot. In terms of rejection, it can be in the form of a pin bar, an engulfing pattern, or just simply, a very clear, simple rejection of that area. So these are two ways you can go about looking to trade that zone. So up next, let's talk about New Zealand dollar. So New Zealand dollar, this is the chart of New Zealand dollar, and if you look at the weekly chart, again, the trend is clearly towards the downside. On the weekly chart perspective, it tends to retest the 20 EMA over here, then it sell down, retest the 20 EMA once more, then it sell down, then it had this flag pattern. And what happened this week is that we had a breakout towards the downside, but we have yet to see any follow through. So this was the breakout towards the downside, but we can see this very long wick where buyers came in and pushed price back up higher. So again, right, where you want to look to trade the New Zealand dollar, where is a favorable location to trade from, if you ask me, it's definitely this resistance area over here. So if price does retrace higher back into this resistance zone, again, this is an area for you to look for shorting opportunity. You are trading with the trend, and the beauty about trading from such zone, such clean, obvious zone, is that you will know instantaneously when you are wrong, right? Because the moment price breach above this zone by, for example, say a 2 ATR distance, you know that you're probably wrong and you should get out from your trade. So this is one thing I like about trading from clean zones, because it is very obvious to me when I know I'm wrong. So this is where I usually get off my trade and tada, that's it. I take the loss and I move on. So New Zealand dollar, this is the zone that I'm watching for, and something for you to take a look out as well. So up next, let's look at euro dollar. So euro dollar, you see this rejection over here. So one thing to take note is that it has actually came into a very obvious level. It came into this clear resistance area over here, and that's not it, right? We have another confluence factor, which is the 200-day moving average. And if you notice, right, I plug in my 200 period moving average, I click OK, and it's this black line over here that you see on the chart, and coincide with this resistance area over here, right? So there's actually no surprise why price came up, right? Triggering the cluster of stops over here, and then it sell back down into the range. So this is a very clear example of rejection of higher prices and a very key area on the chart, right? A key resistance area. So right now, for traders who are short, I would say areas where you may want to consider taking some partial profits off the table is this swing low over here and this swing low over here. So this is my take on the euro dollar, something for you to pay attention to as well. And last but not least, right, I'd like to talk about natural gas, right? Because it's it's very interesting, because natural gas, clearly you see on this chart, it has been ranging for the last, I would say, 8 months, right? This range over here. And the thing is this, the longer the price range, right, what usually happens is that you have a clearer breakout, a clearer trend, right, after this long sustained period of a range market. So natural gas is something that I'll be looking out for. For me, I'm looking to trade either the breakout towards the upside if price trades higher, and I'll be looking to short towards the downside if price trades lower. So I'm looking to play both sides of the market for natural gas. I have absolutely no idea which direction it will break out of, so I don't try to predict. So whether it's going to trade higher, trade lower, I'll be prepared for both scenario, and it's something that I'm definitely watching closely. So that's all I have for you in this week's market analysis. I hope you'll find it useful. With that, I wish each and every one of you good luck and good trading. I'll talk to you soon.